Hello, hello. Good morning. Welcome to another ES Futures Trading stream. Today is Tuesday, September 26th. It is now 5 a.m. Eastern Time. In the US. Alright, straight to the market. Let's talk about what happened yesterday. Let's do a small recap of what happened yesterday. Yesterday, we had the overnight inventory was fairly balanced. No? I guess settle was here. We have a good amount of trading above settle and some kind of extension to the downside as well. And the market opened, where the market opened down here. Guys, so I hope you have seen this. Sorry. The market was coming from the market is in liquidation mode, right? The trend is to the downside. We have seen that all time frames are to the downside. All of them are seeing with a very important reference down here that is common for all time frames. And when the market opened with a gap. There was a gap here. One of the most profitable trades are when the market tries to close the gap, opens here, tries to close the gap and fails. Alright, fails to close the gap and then keeps its directional move, in this case to the downside, in the direction of the gap, right? Notice where this gap is relative to all this process, right? We already have one gap here, and another one here was forming, right? This is the inventory is very short here. The market is very short. The market closed the gap yesterday, and there was some. I didn't know at the time to call this short covering, right? Because this back and forth. But something that we talked about was this high, the lack of excess at the high, and how this kind of highs often leads to, or not leads to, but kind of like a hold or prevent or limit the damage the market can do in the opposite direction. Now, especially after this long break, remember this is a market that's very short now, and it did. And also we have this. Remember these references here. The market is at this key level. It's the end of a trade. We have the weekly time frame here. We have a range here. The market reached the opposite side of that balance, which is the end of the trade, or not the end, but the ultimate destination of this trade. Now from here we have another one. What's going to be? I don't know. It could be, has look below. You can check back this one again. You can break this resistance, you can close this gap, break this level and trace towards the opposition. No, I don't know. Nobody knows that. Also, we have the same situation in the daily. It got inside this range, this 3, 6, 9 day range, and reached the opposite side of that range. And also, so the market reached multiple ultimate destinations on multiple time frames here at this area. in this specific area. Now, the market is it's in this situation where it's exploring. What I'm going to do here now? I got to keep going lower. This kind of what Jim calls a go no go level, or traders call. Yeah, this is an expression that Jim came out with, is the go or no go level here. The way how this was made, or the thing that I was trying to highlight here, is how the market just tries here. When the market comes down here, they stop it at half back, it stop it at open here multiple times on A here when it was going higher, but just tries here. When it comes here, just tries here. And it was very boring. It was very boring. And this is what I'm trying to another thing I want to say is, when the market is very boring, it is very hard, but I try to stick to my trading desk, because things can happen, right? Sometimes things happen really quick. I was getting very bored, just observing what the heck is going on here. I started to see there could be something here. Gosh, I just leave the desk for like less than a minute to make myself a sandwich or to grab some drink. And when I did that, the market was here. When I come back, the market was way up here. Right? So I missed, not that I wanted to be long here. That was not my feeling, but I missed the action, how this was made, right? How this was made. When the market was up here, okay, this is short covering. We got inventory that's very short, and traders were trying to short the market, and these traders were just forced to cover. And then we have a range. This is also time after time. There's a lot of repetition on all on every business and every job you do. There's a lot of repetition, and trading as well. But trading has this particularity that there is repetition with variation, right? One trade that you will find is what happened yesterday here, right? What happened yesterday here is what this trade is, right? We have this situation. We acknowledge what's happening in the bigger time frame, what's happening in the intraday. This is short covering, and the market just doesn't have it. What do you have up here? You have from yesterday. The most important thing for me was value area from the previous day. The market tried to get inside, it couldn't get inside. It just doesn't have it. This is sign of weakness, and we talk about that as well. If there is something serious here on the upside, first the market will not close this distribution. The market closes on G. And we start on will move value inside previous day value area. And also we have some kind of liquidation. If that doesn't happen, well, we're going to be increased if value is not moving inside. Okay, that's another piece of information that we have. And the trade itself is the following. You have this range. We have this range here, this formation here. And you will see, notice these highs. What's happening with these highs? Each one is going lower and lower and lower and lower. What do we have above L? What do we have above K? What do we have above J? What do we have above H, G, and F highs? We have stops, right? We have a bunch of stops. This is what is called for a potential for firecracker effect. Because once the market hit one set of stops here that are set, probably these traders have set the stops here, right? Then it hits another one, and the market just keep boom, has this upside movement. But something peculiar happens in the lower side as well. In this case, one, we have the distributions have been closed, right, which is a sign of weakness. And then we start to see, we notice the market is being bought from certain level, right? We have G, H, I high here, all together. right? And then JK here. Rotational market with accumulation of stops in this area as well. By the time we have this trade, this develop, and the trade itself is not this one. Okay, the trade is not this one, but the trade is taking the opposite side of this range, because it's very hard to take this one. In this kind of market, no, there's nothing. When this break happened, I said no, there's no way I'm going to be short here. No way I'm going to be short here. But when this really stops here, right? It just stops. It doesn't have any kind of continuation. So that's when you start to see, okay, there's a potential here. And you have a low here, somewhere in here, and the exit or the stop is somewhere maybe a couple ticks from this low or one tick below, and that's it. Not too much. Going long here is a little bit more risky, because the thing about trade is we need to have our stops in place, or we need to think about where our stops are going to be placed, and using the structure of the market. For example, here in this, the market is going lower here. Okay, what happens if, for example, H takes G high? There is an action that's going to the downside here, but if H takes G high, that changes the market in the same way how A closes the gap. The fact that the A closes the gap changes the market. This change, the structure of the market has changed when the market closes the gap. I am not longer watching the downside here, what the market does. If there's any potential selling here, that changes everything. G taking F highs or I taking H highs changes the structure of the market. I'm not going to be short here, never in this area, never here, never here. That's not my mind. I just saw too much risk here. I'm not that type of trader. There are another traders that are selling here, another ones that are buying here. You have a trend that is to the downside. So traders will be selling rallies, taking profits in the breaks. Where is the break? Has break below F. This is one. Right? You don't expect too much in this kind of days, in this kind of rotational days. Maybe 1-2 points, and that's it. Now, that was the explanation of this trade. Okay, not of the market, but the trade. That and this doesn't happen now. Now that you have heard about this, you will be observing that this will happen a lot of times, right? It doesn't happen often. That's the thing. It doesn't happen. I don't remember the last time when I saw this. Maybe a couple months. I don't know. But it happens. When the 45-degree line also is a good, can be a good trade, and also works in the same. It has the kind of same principles behind it. Now, overnight inventory, going to today, the overnight inventory is very short. You have settled here, multiple distributions here, sign of emotion as well. All these longs here, because this was just a short-term trade. All these longs are being removed here. And now, coming into the market today, the long inventory on this area has been, we find ourselves under water here. Still, the market is inside previous day range. Doing that is an advertisement for chop. The closest the market opens to the center of the range, the higher the auto chop. We have a very prominent overnight POC up here. Very prominent. The wider it is, the wider the POC, the higher the odds the market is going to come back and recheck that Sometimes there is back and forth to go around these areas here. I would pay special attention if that happens. You know what the market does? It kind of market close at least these distributions in the overnight. But this is something that has to happen. For example, in the first period, right? If it takes too much time, like second, third, fourth, 50 period, the less valid this distribution we have, because there's not much here. Notice the amount of inventory we have here. The overnight has traded quite a bit. It was volume, overnight volume was decreasing, now has increased again. So there's a lot of shorts here. There's a lot of shorts. Another popular trade out there is counteraction to overnight inventory. What's the situation of the overnight? Is short, almost 100% short. So, and what's the counteraction to a short inventory? Is a rally. Okay. Now, if this rally doesn't have volume, meaning volume here, notice for example yesterday how much volume we have. You know, very almost about the same as the previous day. You start to increase here, but this is nothing. And at the end, it's lower. It's lower than Monday. Or lower than Friday, my bad. Today is, yesterday was Monday. Okay. If this movement, this upside movement doesn't have volume, the odds that is just a counteraction to overnight inventory are high. The other thing is this market is very short. It's very short. It's not unusual, and it's at this key level. Right? It's not unusual that there's some short covering here. What happened with short covering? Right? The shorts from these levels, from here or here, whatever, they start to cover. How you cover a short? You buy. Right? I'm talking about short covering, not short squeeze. Yeah, short covering. They start to cover, and there's some rebalancing the market have. Rebalancing inventory the market can have here. Notice how far this market has traveled in just a couple of weeks, right? It took the market 5 weeks to go all the way up here, and just 2 weeks. 2 weeks, 1 week basically, to travel to the opposite side, to retrace all of the gains that the market has had. And we are at this level here. There could be some rebalancing. Remember the intraday, there's some little bits rebalancing inventory, pullback, and then market keeps going higher, or whatever the situation is. The same thing happens in all time frames. It happens here in the daily, happens in the weekly. It also happens in the monthly. Okay. Now, from yesterday, we don't have weak levels here. We don't have, these stops have been corrected. We have excess at the high. The low also is not that. Maybe there's something. I don't think so. Maybe there might be something here, but there is no weak levels here. It is quite curious that the last days we are not having these weak levels, even though the market has been trading mechanically. We know how this looks. This is a full level up here, but the intraday, okay. This level, for example, is very mechanical. Right? This is a weak level that has not been corrected. 1, 2, 3, and right at the 40 is one thing that it has been sold from one exact level, which is IK. I can put J up here as well. But I have to add that it is also the 4500. Right? That's why I usually put a gray line here to highlight those. It's 4 white here, 1, 2, 3, 4. But this is extremely weak. My God. Okay, this is FOMC. Double high, 4 white high. This is, God damn, this market is so weak, man. There's the same structure that we have in the lower side below this level, which is super weak, exponentially weak, is the same thing that we have in the upper side as well. Gap, 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 gap. But both from the 50s, right? Both from the from the 100. Both from the 100. The same kind of weakness we have on the lower side. All the way here is just the market is leaving in the upper side as well. It is hard to remain neutral in this business, but I think it's very important to do so. To try to get rid of any biases that we may have, because you will hear a lot of negative information out there. Notice also how the bond market has break these lows. Can you see these lows? This is also an historical low here. How much time we have? 3 more minutes before the open. Let me put this maximum monthly. My God. I cannot see it. Well, this is historical lows we are having here in the bond market. Historical lows here. On my charts don't see any low. So this is putting tremendous amount of pressure in the bond market as well. And notice what year this is. What year is 2010? My God. 2010. 14. Oh God, look at this. I mean, this is the 30, right? Oh boy. Right now, this has stopped right here at the low, this range. Oh my God. No, I'm not saying the market is going to break through this level, but this is just, you can avoid to see this, how the market reacts. It was both these two buys here happened right from this low, for example. Right? And now this is trending to the downside. All right, let's go back to the market. We have 1 minute before the opening. I need to do something. There's a tremendous break huge break that's happening in the bond market right now. Market's open. happened here? My God. Ah. Oh, my reference. What the heck? What is wrong with this? Look at this law, man. Do you have this label, for example? Now, who you think will have this label? What kind of traders have this label on their charts? If you are inside any, if you're a member of any chat room, you won't see these labels on any on chart. The kind of traders, what I call is short time frame traders. I'm not even a retail. These are bigger than retail. Most retail are momentum traders. They have seen the market breaking here, going to the downside, and they are, no, the market is going lower. Let's buy. Let's sell. Let's keep selling. The next time frame, kind of traders have this reference, right? The bigger, the next time frame trading capital traders don't have this on the chest. Don't care about these levels. Prominent overnight POC, held back. Notice how POC yesterday moved higher from here to here to here and ended up being up here. Value remains lower. Right? Still inside previous day range. Try to remain neutral on or watching the market is hard. How many trades have you placed now, for example? Right? Are you thinking to go long? I am going to be long. I am going to be short. I cannot miss this movement. The market is going to take this low. I'm going to go short. I'm going to be long because the market is too low now. Okay. What I had here, This is what I post. It takes me doing these little things takes me like took me like 15 minutes, 10 15 minutes, my God, right? And I put here what this observation, the market, the bond market, the levels remain the same. Labels remain the same. And those are just a couple of pieces of information. Right? The overnight inventory being 100% short. What happens if there is no contraction to overnight inventory? Volume is the same right now. I'm checking volume, 123,000, about the same as yesterday. As we had yesterday. Trying to remain neutral is hard because you see this market going lower and lower and lower. No, market will keep going lower. Yeah. We talk about the sequential trade as well today. And what I say, the odds. After all this movement that we have, there could be some rebalancing. The odds of the market opening when the market opens inside previous range, the odds of rotations are high, right? Relative to when things like that doesn't happen. And the closer to the signal, the higher the odds of rotation. And to put in context what has happened, the market is in this correction mode. The market is correcting, rebalancing inventory, liquidating loans, and in the process, inventory is getting short, very short. We have very short inventory here, and now we have very weak short inventory from last night. What can happen if this inventory is not corrected, is not repaired? Well, you have shorts here, a lot of short inventory here. Basically because it's below saddle, okay? Below saddle, short. What can happen if this is not corrected? It's adding more short inventory to the already short inventory, weak inventory, and this inventory is even weaker. You see, it's held by even weaker traders. The overnight traders are the weakest of all. Now there's some correction here. To overnight inventory. Okay. Market open, didn't give up. Anything. You want to say something? You want to comment something? You have any questions? Please just let me know. What's the bigs doing there? 1760. Oh, now there are talks about the dollar trading high, the highest since November 20, November 22. That was a year. I think what I think what is saving this market also is the dollar. Dollar has an impressive rally. Now just take a look at this. Look at this rally the dollar has had since July. Gosh, this is and what happened before? Market, takes the elevator. When it goes down elevator. When it goes up, it uses the staircase. This is quite the crude. Look at the crude, brother. Hey, boy, this is quite risky. Notice the multiple lows here, lows, and this. How these ones are? This can come all. This market can come back crashing all the way down to here to this gap. Wow, that would be impressive. Nobody's paying attention to gold now. The intraday, what's happening in the intraday? Okay. Notice where it opened today. It took all of yesterday's range out. Now it's back inside yesterday's range. The potential destination when this happens is the opposite side of the range, is this low. I like to see these histograms here. Notice how it dries here. Let me call some thick data here. I don't like how this looks. Let me see the real thing. I'm requesting data here. Because what I notice the accumulation of volume here. It's a lot of volume in the upper side. But this is just a trade, just one trade. This is the second part of the sequential trade here. Taking this low, then taking this high, and that's it. That's it. What the market is doing? Market is going lower. Oh my God. Oh my fucking God. Look at this, man. Look at this trend line you have here. Dude, what the heck? God damn it. I didn't see this yesterday. Ugh. Oh, okay. I mean, can you see you keep discovering things all the time? All the time. What I was going to talk is about this. Now notice how this day, for example, there's a huge accumulation of volume here from the previous day. This is daily histogram. This is daily. This is the periods. Right? And how much we have? 35,000, 33, even more yesterday. We have 40 something, huh? Interesting. Can you see? 30, 30, 40. Lower prices are attracting volume. Okay. And but there's nothing here, right? There's nothing here. If the market takes these levels out, it can go higher because there is going to be shorts. The potential for the short inventory here to be forced to cover is high once this market takes this high volume area out. But notice how it dries. It dries, and what it does, what it does actually is adds more volume here. You just move this one over this, and you will have this whole area from here to here, all reds, right? All reds here. Now, what yesterday does is not quite the same because this freaking dries here, right? This dries very obvious. Adds more volume here, adds more volume here. If you put 16,000 to this, you got another 40,000. So it's adding, it's coming. Red here, keep going, red here, more reds here. So there's a lot, there's a huge accumulation of inventory here. Starting from this level. Starting from this level. I'm going to highlight this. This is okay. I think this is interesting here. All the way up to here. It is not just this and this, right? But the whole thing together. Because this one doesn't take this one out, and this one doesn't take this one out. This one's out. Just add to this. And more is added here. This can be an area. I will pay attention to what the market does when it comes to this area today. If that is the case, which is that the 66. Let's call this from the 66 to make it an easy number to remember. 66 to 72. Alright. This could be key. Man, I will call this 28, 26 from this level. All the way to, I can make it all the way up to here. What is here? 10. Just do it to this rally high, to this high here. Okay, this. Okay. It can be actually all the way up to here. But this day is just adding volume, keeps adding and adding and adding. Right, all the way down to here. This here. Okay, I have that for context. Just adding, that's another piece of information here. 66, 72, 66. What do we have in 66? God damn it. Look at this. POC. See, this is 72? No freaking way. This is the. No, this area here is POC. This POC could have been here, anyway, up here. It's very wide, right? That is a. God, man. Look at that. This is beautiful. How the market works. The dynamic of the market just keep adding value below value. Right? This one adds value below this. There is nothing here, but this one, just put this one on top. Put this one on top of this one. Just keeps building. Value lower. Now, you have this day here. But you know, can you see this? Can you see? I have just noticed something here. I hope you have seen it. You can see as well. Just take a look at this. This is weak, this is weak, this is weak here. Super weak. And then you have basically nothing here. Nothing here. Huh? Nothing here, multiple distribution, and then the market is short covering here. All of these shorts here, I'll start to cover here. How do you cover? you buy, right? But there are another type of trades that keep selling the market, selling. The market is breaking, market going to be even lower and lower and lower, and they keep selling. Why the traders from this area are, exiting, are leaving. That could be. Okay, the market has taken today's low out. Value is lower again. The market could not get inside value area from yesterday. Now let's go and try to remember what we have just talked. Right? Keep that information in the background for when it becomes relevant. Now the market was being bought from these levels, from this area. Now it's being sold from that area. It didn't have upside continuation. Now it's being sold from that area. This is resistance now. What was support? What was support? Once it's breaking, once taking out, it becomes resistance. Now, how did the market take this low out? The market, if the market closes up here, it's still on downside day. The trend remains intact. Oh my god, look at this volume here. Look at this, man. It is 52. God damn. There's nothing here. 52. It can be about the same as yesterday. About the same as yesterday. A little bit lower than yesterday. Now the market has taken yesterday's out. I am going to be short. I'm shorting now. I'm short now. Market is going to go to 2000 now. Now let's be calm. Let's remain calm here. There is something here. There was a lot of volume here yesterday. We're having 12,000 here. This is 2 tick increments. 12,000 here. We have 10, 12 down here. And we're having the same amount of volume up here. Really good volume here. It's just too much. It's just taking too much to take that level, man. If I was short here, this kind of actions will definitely would make me second guess myself. I don't like this action here. It's just the market doesn't have it. I'm not saying it's not going to break, right? I'm not saying the market cannot come all the way down to here, because the trade is in the direction of the trend here. Taking this is continuation, but the way how he's doing it, that is what. Alright, it is almost 10. couple more minutes. Always keep an eye on your watch, on your clocks as well. On your watch, you know, the first minutes and the last minutes of the period are. You will see if you can teach your brain uh, to pay attention to the market at those times. You will see change. You will see what there's. There usually there is those times is when the market confirms or rejects or prepares to do something. The market, for example, could be let's see, it's going lower and lower and lower, and then the next period opens, and in between the first somewhere between 3 to 7 minutes, there's a huge movement. It can be a huge movement in the opposite side, in the opposite direction, or it can be a huge movement in the direction. But that happens in the first minutes of the period. Also happens in the last, like the last 3 7. The center is not a good area. But what I'm seeing here, the next period can open below this and sell from previous day low. Now the market now is looking below yesterday's range. Okay, we can have downside continuation. We can have range around this area, around this level, or we can have failure, which would be a look below and fail, look below and then keeps going high. All those three are the scenarios of this particular action here. You have location, you have an important reference, which is also overnight low, but more important is yesterday's low. And the context of this area is that this area is a multi-time frame reference. The bull market is just as yesterday. $43.25 would be this level here. Would be officially, this level, taking this level and trading inside, officially getting inside the 13-month range. I know we have it here. Well, this is a correction. This is the level that happened back. This is 1 year ago. Look at where it's selling from. Okay, that's my alarm to take my pills. Consumer confidence. 10 a.m. Now this level here, this 13-month range, If it wasn't in the radar of traders, now it is, not because of the month, but because it is the opening as well. It's not coincidence that the market has sold from this level. We have the opening here. Now we'll just let the market settle here. I don't see anything here. Market selling from the opening, market buying from previous period low. Volume is a little bit lower than yesterday. And even lower than I expected it to be. This is, how much is this? Maybe 3%, 5%? Let's check that. How much it is? Let me check. Oh, 7%. 7% lower than yesterday. Silencio. Alright guys, it is 10 a.m. If there's no question, unless there's any questions, I will call it a day for the stream, and wish you a good rest of the day. Stay safe out there and good luck. Have a wonderful day. God damn it, same fucking level that you have here. Hey, check this out. It's taking this low. It's taking this low out. It's very freaking close to this level of 25. Huh. This is what traders are watching. Okay. Alright guys, 25.50. 25.50 is actually here. This is irrelevant now. This also is not too much. Alright. Okay. I wish you guys a good rest of the day. Stay safe out there. Bye bye.